Today I'll be calling cable. My name is Wakar Meyer and I'm your Elliott Wave analyst, reviewing what has been and predicting what is likely to be in cable price action. So, for those of you that wait with bated breath for my analysis of the pound, sorry I didn't get to an episode yesterday. I'm sure no one was vastly disappointed. Uh, not a lot happened, so there wouldn't have been much to update. But as you can see right here, price action has made a new high. Okay, so what does that mean? Does that mean that my count here is wrong? Uh, I don't think so. I think I've counted this form correctly. What I think it means is that the correction is extending. Okay, so I think this was correct. 1, 2, 3, 4, 5. I think what we're seeing now, and well, let me back up a little bit. Let me go to a bigger chart. Let's just recap real quick. I think since 2009, the British pound has been making a triangle. This move up in 2009 was wave A, move down was B, this move up was C. This entire move from basically early 2011 to early 2013 was the D wave, D like dog. And now I've been saying the whole time that it's making the E wave. Well, generally in a triangle, one of the legs is going to be a complex leg. Now, I thought perhaps it was the C leg. Even though the D leg is wider and longer in the time, it does not look complex to me. It looks like a zigzag here, A, 3 waves up, 3 waves down, and then 5 waves up for C, so that completes B, and then another 5-way drop into C, completing D like dog. So that says to me that the E leg is going to be the complex leg. So either it could be a double zigzag or it could turn out to be a triangle. So I think I'm just going to go with double zigzag. So now let's zoom into, this is a weekly chart by the way, let's go ahead and zoom into a daily chart. And so here's the daily chart. And I counted this structure as A, B, and C. So that would make it W. Now there's another way you could potentially count it as well. So I could call this W, or I could say that this was A to this point right here. This was B, and then instead of this being W, this could be 1. And then it would come down, make a second wave, move up, make a third wave, fourth wave, and fifth wave to complete C. I think I'm going to not make that my top count. It seems less likely to me just based on the amount of room that we have for this particular count and the idea that a what do you call it, that a correction should stay within a channel. So I'm going to go ahead and say that this is ABC complete to make the greater W. Now we should see a X wave, okay, and W would be here. So now if I zoom in a bit, and we're going to go to a 72-minute chart, okay, this would be where 5 waves up to complete C is. This is our W wave. This is the terminus of W. I think what it's done since then is it's come down and it's made an A wave, and now it's making a B wave that will likely terminate somewhere near this R2 on the weekly Fibonacci resistance. And then I'm going to be looking for a short, okay, that's going to come down. Probably I'm thinking to this S2 level. Now, the internal structure of what I believe is this extended fifth, right? So here's your extended fifth, just like I said in previous episodes. Well, it has an internal second, and I've marked that zone with these 2 yellow horizontal lines, okay? So I think price is going to retrace into that zone. We should see a downward movement as soon as it gets up to this level, price gets up to this R2, we should see a downward movement into this retrace zone. That will complete the X wave. So you'll have A, B, and C, 5 waves down to complete C. That'll be your X wave. And then from there, we should see let's see if I get the right chart here. That's the wrong chart. And you know what, let me just, sorry about that. Let me go to a daily. Let me just, yeah, there we go. There's the daily. So also, if you notice that that price level where I said, here, let's see. Sorry, I'm flipping back and forth here a lot. But anyway, you can see this price level is between 53.97 and 53.31. Okay, so now going back to the daily chart. Yeah, that's not the daily, that's the weekly. Going back to the daily chart. Wait a second here. No, it's moving it around on me. Sorry. There we go. So going back to the daily chart, you can see that 53.25 would be just about in that zone. So I would expect it to come down to the R1, and this is for the monthly Fibonacci support and resistance lines calculated based on May's price action. So we should see a move down here, like so. And then it should continue up to make Y. Y should be another zigzag, okay? So if it's going to stay within the trend line, I'm going to go ahead and make a trend line there, create a parallel, move it up to the top. I would expect price to do something like this. You know, it's going to do that. That'll complete the X wave. You'll get something like that. That'll be your A wave. You'll get some sort of B wave, and then another 5-wave structure that would be a C wave. So you would have the completion of X, a move up A, B, C, and that would complete Y. And if you notice, this whole time I've been talking about this structure, this C wave, where the 5th wave was the extended wave. So you've got 1, 2, 3, 4, 1, 2, 3, 4, 5. Okay, I hope you all followed that. I said that it would be likely to get to the terminus. You know, that's textbook. So this is the terminus of that internal second right there. And as you can see, this sort of hypothetical path that it could take while staying within the channel, it gets us there. So this particular form needed to extend in order to achieve that point, and we'll see how this plays out. I've been fairly on track, and hopefully I'll remain that way, but I think we've got at least another, I don't know, maybe another month of upward movement. So what I'm drawing right now is, if this is indeed the W wave, this is what you would call the primary angle of the wave, and then I could put that somewhere wherever the terminus of X is going to be, and it could be lower, it could come all the way down here. Then I might say, okay, well, Y is going to be the same sort of length and time as this primary angle, and you can see that basically gets us to the same point again. So that's today's call. I hope you'll join me again for tomorrow's call.